about this for a second. Sam Altman, the guy who literally started this whole AI craze, is telling us we are in a bubble. Then you've got Alibaba's chairman, Joe Tai, warning that the market's getting overheated. And to top it off, investing god Ray Dalio is saying, yeah, this looks like a bubble. So when the guys who know the most are all waving red flags, should the rest of us be running for the door? All right, everyone, and welcome to the debate. We are here for one reason: to cut through the noise, to challenge the narratives, and to help you find a clear path forward in this incredibly foggy market. So, let's get right into it.
All right, everyone. Let's talk about the elephant in the room, the AI bubble. And yes, it's absolutely about to burst. Look, I'm not here to bash AI as a technology. AI is revolutionary, it's powerful, and it's going to change our world. But that doesn't mean we should ignore the warning signs flashing all around us right now. First, let's talk about the numbers that should terrify every investor. MIT just released a bombshell study showing that 95% of companies investing in AI are getting zero return. Zero. Despite spending $30 to $40 billion on generative AI, only 5% of companies are extracting any meaningful value. That's not sustainable, folks. Second, even Sam Altman, the guy who literally started this AI craze, is warning us we're in a bubble. The OpenAI CEO himself compared today's market to the dot-com crash. When the person making billions from AI hype tells you it's a bubble, you should probably listen. Third, the valuations are absolutely insane. Apollo's chief economist says AI stocks are more overvalued than dot-com stocks were in 1999. Palantir is trading at 500 times earnings and 100 times sales. That's not investing, that's gambling. And here's the kicker. The infrastructure costs are unsustainable. We need $3 to $7 trillion just to build the data centers required by 2028. That's more money than exists in our entire credit markets. If AI doesn't deliver on its promises, all that money gets flushed down the drain. The market is already cracking. After the MIT report came out, NVIDIA dropped 3.5%, Palantir crashed 9%. When bad news can move trillion-dollar companies that fast, you know we're sitting on a house of cards. Look, I believe in AI's long-term potential, but right now, we've got dot-com level valuations with almost zero real-world returns. That's the textbook definition of a bubble about to burst. Smart money is already heading for the exits.
Hey everyone, thanks for having me on. So my opponent just painted a pretty scary picture, but let me tell you why they've got it all wrong. First, let's talk about that MIT study they mentioned. Yes, 95% of companies aren't seeing returns yet, but here's what they missed. The same study shows that companies buying AI tools from vendors have a 67% success rate, while those building internally only hit 33%. This isn't about AI failing, it's about implementation strategy. Companies are learning, and the smart ones are already figuring it out. And about Sam Altman's bubble comments, let's get the full picture. Yes, he said investors might be overexcited, but in the same breath he called AI the most important thing to happen in a very long time. He's warning about hype around weak companies, not dismissing the entire sector. That's actually healthy market correction, not bubble bursting. Now, let's look at real numbers that show this market has legs. NVIDIA just posted $44.1 billion in Q1 2026 revenue. That's 69% growth year over year. Their data center business alone hit $39.1 billion, up 73% annually. Even with a $4.5 billion charge from China export restrictions, they still crushed expectations and beat analyst estimates by $800 million. These aren't speculative numbers. This is real revenue from real demand. Here's the kicker. The infrastructure spending is massive and committed. Tech giants are spending $320 billion on AI infrastructure in 2025. Amazon alone is investing $100 billion this year. Microsoft, Google, Meta, they're all doubling down. You don't commit this kind of money unless you see sustainable demand. And unlike the dot-com bubble, AI is already delivering measurable productivity gains. PwC found AI delivers four-fold productivity growth, and IDC shows companies getting 3.7 times ROI on AI investments. The dot-com companies had websites and dreams. AI companies have proven business models generating billions in revenue. Look, some valuations are stretched, I'll give you that. But the core infrastructure demand is real. The productivity gains are measurable, and the biggest companies in the world are betting their futures on it. That's not a bubble, that's a revolution with real economics behind it.
You know, I want to thank my opponent for that masterclass in what we call bubble logic. It's the kind of boundless optimism you only hear right before the roller coaster takes a very sharp turn downwards. They say the MIT study isn't a big deal because the smart companies are figuring it out. Let's be brutally honest. If a new drug was released that only worked for 5% of patients, we wouldn't call it a revolution, we'd call it a recall. The fact that 95% of the corporate money being poured into this technology is currently vanishing with zero return isn't a learning curve, it's a warning sign the size of a billboard. And the attempt to reframe Sam Altman's comments is just remarkable. It's like the captain of the Titanic saying, "Yes, I did mention some floating ice, but I'm still incredibly excited about the long-term potential of transatlantic voyages." When the man who built the ship yells iceberg, you don't admire his optimism, you start looking for the lifeboats. He knows the hype has officially left reality in the dust. Now, let's talk about the crown jewel of their argument, NVIDIA. My opponent holds up their revenue as proof of a healthy market. But NVIDIA's success isn't proof of a sustainable AI economy. It's proof of an arms race. They are selling shovels in a frantic, speculative gold rush. And we have to ask the multi-trillion-dollar question. What happens when the gold miners, after spending up to $7 trillion on shovels, realize there's no gold in the hills? That's precisely what's happening. That 95% failure rate isn't just an abstract statistic. It is a direct verdict on the return on investment from those very chips. A CFO can only approve multi-billion-dollar hardware purchases for so long before asking, where's the profit? When 95% of them have no answer, the spending stops. The chip orders are canceled, and the music stops playing. The hype is real. The returns are not. That's not a revolution. It's a bubble, and it's ready to pop.
All right, let's keep this real and a bit fun for everyone watching. You know, my opponent's argument sounds dramatic, almost like they're pitching the next Hollywood disaster flick, AI Bubble, The Reckoning. But here's the plot twist they missed. First, that 95% failure rate headline is everywhere, but it's missing the real story. The MIT report also says 67% of companies using external AI tools get positive results. So it's not a dead end, it's an adoption curve, just like cloud, smartphones, and literally every major tech wave. Remember when everyone said the iPhone was overpriced and doomed? We all know how that turned out. Second, Sam Altman's statements are being stretched like a gym band on leg day. Sure, he's cautious about overhyped companies, but he's also actively raising billions and investing in new AI startups while OpenAI keeps breaking records. If the captain's shouting iceberg, why is he buying more lifeboats instead of heading for shore? Now, on NVIDIA calling them shovel sellers in a gold rush? That's catchy, but let's talk facts. NVIDIA just did $44 billion in a quarter, and their data center revenue hit $39 billion, up 73% year on year. These aren't lottery tickets. It means their chips are powering real businesses, drug discovery, robotics, self-driving, medical imaging, you name it. AI is delivering practical value across entire industries, not just tech giants. Let's get honest, every revolution has some wasted investment, but we're talking about a market where even failures drive innovation and efficiency. AI is already giving us fourfold productivity gains and letting companies do things they couldn't dream of 5 years ago. So yeah, some people will lose money on the hype, but right now, the fundamentals are strong, the revenue is real, and the world's biggest companies are doubling down, not running away. You call that a bubble. I call it progress, with a dash of growing pains.
All right, folks, let's wrap this up with some brutal honesty. My opponent just gave us the classic bubble defense playbook. This time is different. The fundamentals are strong. Look at the revenue. You know what? That's exactly what they said in 1999 about Pets.com and Webvan. Same script, different decade. Let's do some quick math. They're celebrating that 67% of companies using external AI tools get positive results, but that's maybe 5% of the total AI spending market. So we've got fantastic results for a tiny sliver, while the other 95% of the money, literally hundreds of billions, is still going up in smoke. That's not an adoption curve. That's a bonfire with a few people roasting marshmallows. And about Sam Altman still raising money? Of course he is! When you're driving the hype train, you can't just stop and tell everyone the bridge is out. You keep shoveling coal into the engine. He's trapped by his own success. As for NVIDIA's amazing revenue, yes, it's real, but it's revenue from the bubble itself. It's like measuring the health of the housing market in 2007 by looking at how much money construction companies were making. The shovels were selling great right up until the moment they weren't. Look, here's the bottom line that my opponent keeps dodging. You cannot sustain trillion-dollar valuations on 5% success rates. The math doesn't work. The returns aren't there. And when the music stops, everybody's going to realize they paid premium prices for a technology that works brilliantly in demos and fails spectacularly on the balance sheet. The emperor has no clothes. The bubble is bursting. And the smart money? It's already headed for the exits.
All right, everyone, here's where we land. You know what I love about this debate? My opponent keeps using the same playbook that people use to dismiss the internet, smartphones, and cloud computing. It's just hype. Look at the failures. But here's the thing, every game-changing technology starts with skeptics doing exactly this math. Let's get real for a second. That 5% success rate they keep hammering, it's actually companies figuring out what works. And guess what that number is climbing fast? The 67% success rate for external AI tools isn't shrinking. It's the blueprint that everyone else is copying. That's not a bonfire, that's a learning curve accelerating. And calling NVIDIA's revenue bubble money? Come on, these chips are powering everything from cancer research to autonomous vehicles to the apps on your phone. That's not speculative, that's infrastructure for the next decade. Here's my favorite part though. They say smart money is heading for the exits. But Amazon just committed $100 billion this year alone to AI infrastructure. Microsoft, Google, Meta, they're all doubling down. Either the world's smartest CEOs are complete idiots, or maybe, just maybe, they see something my opponent is missing. Look, every revolution has doubters. But when you've got proven ROI, massive infrastructure commitments, and revenue growing at 70% year over year, that's not a bubble, that's a rocket ship. The emperor doesn't need clothes when he's got a balance sheet like that. Thanks, everybody.
All right, over to you, the judges. What do you all think? I'm looking forward to seeing your votes and thoughts in the comments section. We love hearing what you have to say, and I believe every perspective brings something valuable to the table. Also, I've done my best to fact-check the information you've just heard, and you can find the relevant links in the description box below. Before you go, don't forget to hit that like button and subscribe. Your support means the world to us. We'll see you next time. Bye-bye.